What's going on, everyone? My name's Obi and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. Today we're going to be talking about the electric vehicle industry, but we're going to be talking about the electric vehicle industry in the context, or actually the question of promises and reality. Now, I'll be upfront with you. I'm a NIO bull. I own shares. I believe in the vision. But what happened this week got me thinking about a much bigger question. In an industry built on future promises, who's actually delivering and who's just selling dreams? Let me paint you a picture. On July 10th, NIO's sub-brand Onvo began pre-sales of the Onvo L90 5-seater family SUV. In the market, it went absolutely wild. NIO surged over 10% in Hong Kong, and that was for over 6 consecutive trading days, bringing the run up to over 21%. We're talking about a company that suddenly hit 32.3 Hong Kong dollars, and investors are suddenly remembering why they loved the company in the first place. But here's where it gets interesting and why I love the business. The L90 sales price is 279,900 yuan with the 85 kilowatt hour battery pack. That's about 39,000 US dollars, and under their battery as a service model, we're looking at around 194,000 yuan. Now, Deutsche Bank's Wang Bin is projecting 5,000 units monthly for the L90 alone. Add that to the L60, which already moved 31,862 units in the first half of 2025, and you've got Onvo potentially hitting 10,000 units monthly in Q3. That's not just growth, people, that's exponential scaling. But here's what really got my attention. The CICC said that this pricing beat market expectations and positions the L90 as a leader in the high-end 3-row SUV market. William Li, NIO CEO, made a fascinating comment. He said the Onvo team views this pricing as normal and their priority is hitting profit targets, not sales targets. Think about that for a second. In an industry where companies are burning through cash to grab market share, NIO's saying we're focused on sustainable profitability. Well, that's either brilliant long-term thinking or we'll see. Now, let me tell you about the other side of this coin. While NIO is delivering actual vehicles at competitive pricing, there's definitely another side of the coin that should make investors and people who have a vested interest in the company stop and think. Mark Dobin, a Tesla owner from Washington, and this is his third Tesla, mind you, just won a lawsuit against Tesla for $10,000 plus 6% tax. That's about 76,000 yuan, but it's not just about the money, it's about what it represents. Dobin bought his Tesla full self-driving package because his wife suffers from a degenerative disease. He believed that Musk's full self-driving vision could help her travel independently. So he paid $10,000 for what he thought was groundbreaking technology. Instead, he got locked out by a Tesla safety score system, a system that wasn't disclosed in the contract. You need to drive perfectly for 7 consecutive days and hit 100 points to even access the beta, and then you need full supervision. Here's the kicker. Dober had to take Tesla to arbitration. Tesla sent 2 lawyers and a technical expert who admitted under oath that he didn't inspect the vehicle, he didn't review the driver log, he didn't know the FSD details, and he didn't speak with any sales representatives. The arbitrator agreed that there's significant evidence to rule that the feature is inoperable or unavailable. Tesla lost and had to pay nearly $8,000 in arbitration fees on top of the refund. But this goes deeper than the lawsuit. Tesla has been promising full self-driving since 2016. That's 9 years of selling features, as one Chinese commenter put it. In 2019, Musk promised that Hardware 3 hardware would definitely realize full self-driving. By 2023, Hardware 4 was rolling out, and in July 2024, FSD 12.5 launched on Hardware 4 vehicles. Then in January 2025, Musk finally admitted what many had suspected. Hardware 3 can't support full self-driving. But here's the business problem. Tesla has hundreds of thousands of customers who paid $8,000 to $15,000 for Hardware 3 on their vehicles. That's potentially billions of dollars in refund liability for the company. So what does all this tell us about the EV market right now? First, execution matters more than promises. NIO is launching the L90 in August, the L80 in October. They're hitting timelines, promises, and most importantly, hitting profit margin. When William Li says they're prioritizing profitability over sales volume, that's not just corporate speak, that's sustainable business strategy. Second, the market is maturing. Chinese EV companies are moving beyond the growth at any cost stage. They're building actual businesses with real economics. The L60 sold nearly 32,000 units in the last 6 months. The L90 could add another 5,000 monthly, and the L80 another 5,000 as well. That's 20,000 units monthly from just one sub-brand. Third, consumer protection is a real issue. The FSD lawsuit, it's not isolated, it's a precedent. When you promise big technology that doesn't exist, someone's gonna hold you accountable. And in China's competitive market, companies can't make promises that they can't afford to keep. Now, I want to address something one of our listeners commented about NIO rallying on William Li's words rather than results. Look, I get the skepticism. We've seen this movie before with EV companies, but there's some things that are different this time. The L60 isn't vaporware. It's selling 5,000 plus units monthly. The L90 isn't a concept car. It's starting deliveries August 1st. The pricing isn't skeptical either. It's locked in with supplier agreements that maintain the margin that NIO is seeking. This isn't about promises anymore, it's about execution. And after watching Tesla struggle with FSD for 9 years, maybe the market is finally ready to reward companies that deliver working products instead of working promises. The broader lesson here is that in any technology-driven market, there comes a time when promise economy conflicts with delivery economy. We might be watching that collision happen in real time in the EV space. NIO's betting that consistent execution, sustainable profit, and expanding model lines will win over flashy promises and breakthrough technology that may never materialize anytime soon. Tesla's betting that eventually their technology promises will pay off and they'll be big enough to justify the wait. Anyways, I want to know what you guys think. That's it for this episode of the Courtside Financial Podcast. Leave a comment down below, like the video, subscribe, click the notification bell icon. Appreciate you watching. Happy Monday. Catch you in the next episode. I've got to go.